Hello, everyone. Welcome back to the Trading Room. I'm Shane Vernier, and welcome to November's trade. Today, we're going to talk a little bit about what we've got on tap for this week. We've got a few events that are worth watching. We've still got some big stories that are going on right now. We're talking Venezuela. We're talking U.S. government shutdown. We've also got a big-time spike in natural gas. We've got a big-time move in Amazon. Just really a big news day, which really surprises me. Typically, Mondays are very, very lackluster. They're very, very slow. Today has been anything but. So I want to welcome everybody back to the Trading Room here. We're going to go ahead and run through some of our key markets. I think that Mondays are a great time to always be game planning. Always be game planning. So I'm going to talk a little bit about the psychology I like to bring into a Monday session. You know, it's not necessarily the only way to trade, but it's the one that I've gotten comfortable with over the years. And the biggest thing that I always want to stress on a Monday is you don't want to go into a big hole on Monday. If you do that, then you find yourself just trying to fight back over and over and over again the whole week. And a lot of times if you get behind and you take that big loss on Monday, it makes the rest of the week really difficult. So I like to stay, I would say risk averse on a Monday. I like to take trades, but I don't like to put the huge leverage on. I like to watch these ranges really set up for a little while. And I think taking Monday to game plan for the week ahead and be fully prepared to take the risks that we're going to take this week. That's definitely, I would say, a big part of being a successful trader is being ready. And Mondays are a great time to get ready. So it's good to see everybody back in the room. Let's see 54 Cattle Company. Good to see you, 54. Welcome. Let's see. My crypto is suffering a little bit today. Yeah, crypto is sort of all over the board. We'll go ahead and pull up some Bitcoin. I'm really watching that Shiba Inu, though. I think there might be something there. And I'd love to see a big sell-off there and then grab that down around 6 or 5. We'll look at that chart as well. We looked at it on Friday. But crypto is interesting. We're getting a pullback, and we have an opportunity potentially to get some pretty good buys in a market that is fairly bullish. I mean, it's still bullish. It's just pulling back a little bit right now. So let me see Ahmed. Good to see Ahmed. Tina, good to see you. Tina, welcome. All right, guys. Tuku, always a pleasure, guys. Let's get right out to price action here. This is a trade that we've had on the board for a while now. This was the 920 EMA crossover. The 9 crossed over the 20. And since then, we've had a pretty darn good trade. This is why you would take a position this time of year. This is a situation where you've got your technicals lined up. You've got your 9 crosses over your 20. You say, okay, daily time frame natural gas. But what else do we have going for us? Well, we had fall seasonality, fall and winter seasonality. Typically, you do get a bullish bump out of natural gas this time of year. Now, not every time, but sometimes. And this is definitely just playing into a beautiful swing trade. If you do take a look at this bid, you're looking at bidding about 33, somewhere in there, 3.3, and then you're up around 3.7. So that's going to be probably a gain of, I don't know, 15%, somewhere in there, 12%. Really a beautiful run. And you can see we sort of flattened out and traded sideways, pulled back, and then we just have been on fire the last 3 days. A lot of that has to do with some of the geopolitical issues that are going on right now globally, but it really is a function of seasonality. And as a trader, as a commodities trader and a commodities specialist, I can tell you that if you're going to be trading commodities like a natural gas, like a crude oil, like a cotton, like a coffee, whatever you're going to be trading, gold, silver, whatever, not so much gold, silver, but the agricultural commodities and the energies, they all are subject to seasonality. That means at certain times of year you get buyers in there, certain times of year you get sellers. Now, when we see something like this, we say, okay, there's a pretty good move for us. All right, we got a nice big move, nice big bullish crossover here, but the time of the year was really fantastic. So we had a lot of different things that are going into the higher prices for natural gas right now. Now, do they last? Yeah, more than likely. More than likely, you're going to have probably a strong 6 weeks on the market here for natural gas, but you could easily see a sell-off. It's possible. I still like June's high as being a topside target that's very legitimate. I think we're going to crack into the 4s here relatively soon, and if that's the case, I think we're going to go ahead and make new yearly highs. Think about that. June's high was in the spring. That was really the high for the natural gas market this year. And what was so special about June? AI. The AI boom is driving natural gas prices higher because we need a tremendous amount of energy to fuel these data centers, and natural gas is one of those things that before you can get all the nuclear the new nuclear plants that they're talking about building, they have a special name for them, but they're like not a neighborhood nuclear plant, but they're like a sort of a low yield, not like a pocket nuclear plant, but they're very small. And the idea is they're going to build these nuclear power plants next to the data centers and fuel them exclusively off the nuclear. Well, all that takes time. And in the meantime, you're going to need energy. And if you got energy, right, natural gas is going to be a viable candidate. That's why we saw the run in June, the AI boom, and now we're starting to see the run in the fall in the winter because people have to heat their homes. So there's a lot going on here in the natural gas market. I think that was just an absolutely fantastic trade. If that's one of those that you got in on, congratulations. It's pretty good stuff. I think that we're going high. I think that natural gas is going high. There's no two questions, no two ways about it. So I want to start there because that was a pretty darn good call, and I think that we're easily going to wipe out June's high here relatively soon. It could happen today. It could happen tomorrow. More than likely, it's going to be in the middle of the week. Be ready for that natural gas inventories report. That's on Thursday. That's going to be underground storage here in the United States. So definitely want to check that one out. As far as if you want to trade natural gas, feel free to head on over to the Switch Markets community. Thousands of markets, all sorts of different things you can trade, and really a lot going on over there. Be sure to check it out if you're interested in becoming a live trader, a demo trader, whatever. Switch has you covered. Free demo accounts. Lots of free goodies over there too. So be sure to check that out. All right, trade update. Welcome to November's trade. We're going to go ahead and take a good look at this. This was a trade idea that I've been looking at for a long time, and it is a ways off. I'm not going to sit here and say, okay, we're going to be scalping the Euro USD here relatively soon. It's not going to be the case. This one is going to be one that we want to get our zone up, our support zone up. And we want to be taking a look at this probably for the remainder of the month. Excuse me, having a little bit of trouble talking today. But we definitely want to be there at the remainder of the month. This is a zone that I really like. I think we have an opportunity potentially to get it in November. I don't know that we will, but right now we're trading about 115.30s, 115.25s, and we're looking at that 112.50 to 113 area very closely. So we're about 250 pips north of where we need to be. It doesn't mean that we can't get it this month, though. So this is one of those where I would have my macro levels up, and I'd say, okay, what am I looking at in the Euro USD? I'm going to be looking at this support zone as being potentially a great opportunity to step up and bid the market with a little bit of authority, meaning probably going to have a little bit of leverage on this one. So I'm watching this closely. I think we have an opportunity to get it. Let's go right out to price action. You can see where we're at. Just a beautiful run this year. There's no two ways about it. The United States dollar has been getting destroyed this year. They've been getting destroyed really since Trump got into office. A lot of that is anticipating what's going to be dovish policy. If you take a look at some of the biggest economic plans that we've seen in the past 30 or 40 years globally, a lot of times it all revolves around devaluing a currency. And what's happening here in the United States, in my view, the idea is the tariffs and the trade war and all this, but they also want to make their exports hyper competitive. And really the only way that you're going to do that is you're going to have to figure out a way to devalue your local currency. This is a lot like what Japan did. This is definitely the three-pronged approach. Abenomics back in 2012, the idea was, listen, we're going to devalue the yen. We're going to finance our companies. We're going to try to be hyper competitive with our export sector. And in turn, that's going to bring in the foreign direct investment, and that's going to grow the economy from within. That really is a book out of Abenomics, or a page out of Abenomics' book. We're seeing the same thing here in the United States right now. That a lot of the economic growth that's been sort of projected through the new Trump administration, it really does depend on having a devalued currency. And so when we start talking about the dollar, is it going to ever, is it going to rally? Is it going to be strong? It may, but we've already lost a lot of ground this year, and especially with this Euro USD, just an absolute beautiful uptrend, nice spike low there, and we're rallying, and now we're flattening out. So the bottom end of this range, somewhere down around 113 to 112.50, that's an absolute banger. I mean, that's a beautiful buy, so I'm looking at that very, very closely. I think we're going to have an opportunity to get it. I just don't really know when. I don't think it's going to be anytime soon, more than likely. Probably by Thanksgiving, I think. I think you could definitely see that correction. And it just depends on when we get our economic numbers. This week, we're sort of expecting maybe to get the U.S. government to open up again. A lot going on that front. We're going to go ahead and go through some of the economic data we saw today. But Friday is supposed to be a pretty big day. We're thinking we're going to get the NFP report. Government has to reopen. Supposedly there's heavy negotiations going on, and it looks like they're getting ready to probably sign a stopgap measure or a bill. Things have gotten pretty contested here in the United States over the weekend. I'll talk about the news cycle here in just a second, but the Venezuela thing looks like that's going to be on. It didn't happen over the weekend, which surprises me, but it looks like that could potentially happen anytime. And then also your EBT, we're starting to see the air traffic controllers. The airports are starting to bog down. The EBT cards. We saw big-time riots after the World Series in L.A. over the weekend. So there's a lot going on, guys. There's a lot going on, and there's a lot of uncertainty out here. I think that, if you're looking at anything that you wanted to trade, gold probably, safe havens probably, Swiss francs. I think those are probably all pretty good plays. We're also going to look at the dollar yen here because a lot of folks really love piling into the yen as a safe haven as well. We just got to wait and see. So let's see. Let me see. Nicoletter. Let me see. T. Marina. Good to see you, T. Nico. Hi, Shane. What do you think of the Kiwi moving toward the COVID debacle low from March of 2020? Fascinating stuff. We'll go ahead and pull up the Kiwi here in just a second, but it's a good question. Anytime you have levels like that are historically important, the COVID lows, for me, really across a lot of these markets, are incredibly important because you saw what something was worth when the global financial environment was in absolute chaos. So when we're approaching a key level like a COVID low, I would be viewing that as sort of a support zone. We'll go ahead and take a look at that right now, though, in the Kiwi. Let me see Andy Tong. Good to see Andy. I think he has to do it, but to bring more investments. I think you're right, Ahmed, as far as the idea behind Abenomics, essentially. This goes back to Shinzo Abe, who has since been assassinated in Japan. The idea was very simple. We've got to kickstart the economy. And the way to do that was to devalue the yen, drop regulations facing businesses, and try to get the foreign direct investment, the FDI, get that inside of flowing into your economy as much as you possibly can. And what that does is that gives you the ability to grow. And that was the idea behind Abenomics. And you can't really argue with it. It was successful. The United States looks to me like they're going down that same road. I know Trump was a big admirer of Shinzo Abe. That three-pronged approach, Abenomics, you're seeing it in the United States right now. No question about it. But we'll see exactly how it goes. Tariffs are interesting dynamic, especially when it goes to trade. So if we're looking at your monthly chart right here, what do you got right there? April's low, absolutely fantastic. What do you have there? There's your March of 2020 low that you're looking at there. So if we're interested in making a trade here, like a counter trend trade, you definitely want to know exactly where that low is. It's very important. You can see we approached it back here in 2022, and we sort of hit it right on the nose earlier this year with April. Don't discount the importance of that level. The COVID lows, markets have memories. You guys have heard that cliche, I'm sure. The low right there is about 54.69, somewhere in that zone. So 55-ish, probably going to be a big deal. 54.75, it's definitely going to be a big deal. So what do we want to do right now? Well, I mean, your ranges are tight. Your monthly ranges are tight. We've really traded inside of a phone booth for the last 6, 7 months, 8 months. Aside from what we saw in April, the Kiwi's been relatively flat. So nice big sell-off right down to those COVID lows, and then we bounced, and now we're creeping back down there. So the idea here is very simple. It's very simple. You're looking to buy support. You almost have to do it just because we've seen it just be so effective. So you're looking at that low right there, came back down 2 years later, tested that low proximity test, bounced it way up, came back down, tested it again this year on the tariff fears and when everything was going crazy in April, and now we bounced since then. So if we go down and check this later in the year, we're going to have to at least keep our minds open and think, yeah, maybe probably going to take a bid down there. Right now we're trading 57, so we're looking at like 55s, 55.09s. We're not there yet, but it looks to me like we're going to get there. So even though I think that the U.S. dollar is in trouble over the next 18 months to 24 months, I don't really see it gaining any market share. Right now, towards the end of the year, potentially we could see a bit of a run out of the USD. And if we do, that Euro-USD trade is going to come into play, and also this Kiwi trade is going to come into play as well. We just have to see some economic numbers, some data that we just haven't seen in a long time. Looking forward to it, though. I think we're going to have a chance here to reopen the government and get our NFP on Friday. So let's go and take a look at what we should be thinking about this week. Remember, first trading days of a new month, typically you see a lot of action. Today, not so much. To be real honest with you, I was looking for a big-time mover and shaker, sort of on the heels of an active news cycle over the weekend. We just didn't really get it. We really didn't get it. So we didn't get the strikes on Venezuela, so that sort of put a damper on our commodities markets. Natural gas is rocking and rolling. U.S. oil's up a little bit, but really not much action there. So For right now, we need to start thinking about what we're going to do tomorrow, the next day, and the next day to make sure that we make our money this week. It's that simple. Week 45, let's see, Monday, today, there were some ISM PMI numbers out. We'll go ahead and take a look at those. They're tertiary numbers, secondary numbers. You're not going to see really much. Many people sitting around going, oh, I can't wait to trade the ISM PMI. You're not going to see that. But you saw some bids hit the market earlier in the NASDAQ. That had to do with Amazon's announcement. We'll talk about that as well. RBA interest rate decision, that's going to be early Tuesday session. You're going to definitely be wanting to have that on your radar, especially if you're trading the Aussie. Very, very important that you don't get swept up in the volatility. Understand that those central banking engagements, something like the Australian dollar, is going to go crazy when the RBA makes their announcement. For right this minute, we're not expecting a whole lot of fireworks, but you never know. So if you're going to trade that Asia session, if you're going to trade that Australia session that's coming up for Tuesday, you definitely want to be aware of the RBA. Wednesday, ADP employment reports. That's going to be a jobs number. These are going to be our jobs numbers this week. We're looking for our NFP Friday. I don't know that we're going to get it. Thursday's the BOE interest rate decision. That's the big mover and shaker. We've got a few trade ideas out there that face the British pound. We're going to go ahead and recap those more than likely tomorrow. We're going to let them go for right this minute. But BOE Thursday, huge event. We're interested to see if we get rate cuts or rate hikes. We just don't know. All right, Friday NFP Live, that's tentative. We should definitely put a check mark next to that because we're thinking that we're going to get the government to reopen this week. A lot of talk right now. A lot of folks believe that it's going to happen this week. If it does happen, those NFP numbers, just like those CPI numbers, they're already done. They've already got the numbers, so they just have to release them to the public. I'm interested to see if we do get an NFP Live on Friday. If we do not, then we will probably just readjust our schedule. So once again, one of these weeks where our schedule, we're going to be going live pretty much at this time every day. But on Friday, we're going to try to do an NFP Live if we're going to have the number. If we don't have the number, then I'm going to reschedule that just a little bit later on in the day, that's for sure. Let me see, Nico. So you don't look to target those levels, just buy and sell from them. Like you said, you would look to bid from the 2020 low, but I was thinking of shorting opportunities until then. You're not wrong, Nico. I mean, you're really not wrong. So the idea would be very simple. I mean, there's a couple ways to look at these key levels. All right, we'll just go over that. It's good. It's a good day to do this stuff. The idea behind that level is that it is a big public round number. All right, it's right there. It's 54.69. You're thinking, well, that's not a big round number, but it's obvious. Everybody sort of, I guess you could call it the new era of finance since the COVID era. When we shut the world down for COVID, and then pumped unlimited funds, trillions and trillions and trillions of dollars to make sure there wasn't a global recession, everything got revalued. Everything got repriced. The U.S. dollar got repriced. The metals got repriced. Energies did. Stocks, whatever. It all got revalued. So when you look at something like this, it says, okay, that's a historical event. That low right there is very important. Two ways to look at it. You can see that as being a downside support level. That's how I interpret it. Why? Because there was a lot of bidders there, and they've been there 3 times. Now, eventually they won't be there, and you will break and probably move much lower, and then we're going to reevaluate what the Kiwi is worth on a macro scale, and that's great. But until it breaks, we've got a pretty good support zone right there. We know the bidders have been there. A lot of folks are going to call that a demand zone. That's where the bidders step into the market, and they protect that level. That's great. That's fine. What we're looking to do as scalpers is just step in there and see if we can't make a few bucks if the price approaches that. Now, the other way to look at this, and I believe it was Paul Tudor Jones, one of the investing greats, viewed these levels as being magnets. They say, well, there's going to be some action there. That clearly is what the bottom of this market. That's where the debate's been for 5 years, right? So you're thinking, do we go test it again? Pretty good chance of that. So your idea by going short until we get to that level, yeah, there's absolutely nothing wrong with that. Do you sell the market right now? I wouldn't do it personally. I don't know that you have great trade location. I think your trade location's kind of like, well, we're selling the bottom quartile of the yearly range. This could definitely get sloppy and take a while, right? So what could you do? Well, you could wait for a pullback. I would be looking at my 13-period EMA, my 13-month EMA up there at 58.64. That's a superior entry to the short. You could do that. You could maybe try to short up here and put your back up against that yearly high. Maybe you could do that as well. As far as I'm concerned, I would definitely be waiting for a pullback here. So we go ahead and we pull up a weekly. Something like this. Not necessarily the best market structure. Spike high, spike low. I mean, you can definitely see where the money was. It was right there, 58, 58.05, somewhere right up in there. That's a beautiful trade last week. So do you sell it right now? And I would say, no, you don't. But I do agree with you. I agree. I think that this right down here, this zone, till we get down to those 2020 lows, that's ripe. I mean, that's just ripe for sellers to dominate the action. So that's what I would be looking at there if I was trading this with any sort of conviction. I would definitely want the pullback. That's a beautiful pullback right there, right up around 58. So if you got a chance to sell 58s, probably wouldn't pass on that. That's pretty good stuff. How long do you stay in the market, though? Well, I mean, it all depends on what your swap fees are and your carry fees are and what your plans are for your liquidity over the next. I mean, this could really take the rest of the year to get down there, or it could happen relatively quickly. That's the problem with trading, or the biggest challenge is timing things. When you don't have the huge capital, when you don't have the big money that a lot of these folks have, your timing has to be pretty good. And as we roll deeper into the year, I'm not necessarily certain that we're going to see much action at all out of some of these majors, but I think that there's a chance the U.S. dollar could definitely gain a little bit before it loses a lot in 2026. That would be my guess. But once again, we just don't know. So let's see. Ahmed would sell around that Doge, but I think that I would pass until the action at the bottom. I just want to see a test of the bottom. If we get a test of the bottom down there, then we're going to have an opportunity to step up and scalp with a lot of confidence. That's what I would do. But, if you got to trade and you got to get in there, you probably want to be on the short side of it. Definitely, that's where the trend is. It's not a great trend, but the pressure's definitely down. There's no question about it in the Kiwi. All right, so what else do we have to look at today? Well, we've got a little psychology here. I like to be prepared. Being prepared is very, very important. If you're not prepared as a trader, you're almost guaranteed you're going to lose. So what did we talk about last Friday? We talked about No Donation Friday. Now we're talking about Monday. Get it going Monday. It's all about momentum. Trading is all about momentum. Speculation is all about momentum. Life in general is all about momentum. Get something positive going on a Monday, and that doesn't mean that you have to run in there and take a bunch of trades and just try to get a little bit of a gain to feel good about it. What you can do on a Monday is get prepped up for the rest of the week. It's a great time to game plan. We know that the volatility is going to come into the market tomorrow, Wednesday, and Thursday. We pretty much know that. We may even get NFP Friday, so it's a great time to plan. It's not necessarily a day that we need to be trying to make our monthly, weekly, or daily goals. I mean, you don't really need to do that. My goals for Monday are simple. Number one, I'm trying to trade to a positive. That means that I'm looking to take a little bit of money out of the market, not a tremendous amount. I want to start trading with someone else's money as fast as I can. That limits my risk. So if I have an opportunity maybe to take 10 ticks or 15 ticks as opposed to waiting and trying to hit a 50 or 60 tick play, I'm probably just going to take the money on a Monday. I want to get in. I want to go to the positive. I don't want to go into a hole. Now, of course, when you trade, there's always a chance that you're going to lose. All right. So if in fact you do take a loss on a Monday, make sure it's not a big one. That's it. Make sure it's not a big one. If it's not a big one, it's manageable. That means you're going to be able to come back and make some trades later in the week to make your money. Okay? Definitely want to check that out. Focus on analysis. Game plan, game plan, game plan. Be ready to go. Be ready to go for the rest of the week. There's a lot of great trades in front of us. There's no reason to force it right now. Generate some momentum. Let's get it going. I mean, let's just get the ball rolling. I mean, the idea here for us is to try to stack as many chips as we can Tuesday, Wednesday, Thursday, and then throttle it back on Friday and go back and start it all over again next week. That's what we want to do. So we want to make sure that we can get our momentum going. The way to do that is by being smart, game planning, watching out for those huge leverage trades that could definitely just bury you for the entire week. It's tough on your morale. Okay, this is a few things on the economic calendar today. We're not going to spend a tremendous amount of time on this because these numbers, they really aren't that important. Now, if we were economists, I would say, okay, we got to really focus on our S&P Global Manufacturing PMI. You don't really need to do that. All we need to do is this. It came in at 52.5. That's above the forecast and the previous release. Is it a big number? Not really. I wouldn't worry too much about that. It's just sort of in line with expectations. As far as the ISM PMI for October, 48.7. That's a little bit worse than expected, a little bit worse than the previous release. Manufacturing prices, 58. That was beneath what we expected and also down. That manufacturing prices suggests that maybe the inflationary pressures are beginning to subside a little bit. I have to tell you, I mean, when you go out to buy things nowadays, I haven't seen it. I haven't seen it. I mean, the prices are high, and there's no two ways about it. The prices are very, very high, especially when you're talking about foodstuffs, rents, things like that. You're still in a big time inflationary cycle. No two ways about that. I don't care what the numbers say. We all know it. We all see it every single day. So we're watching these numbers. Probably the more important number of these two is going to be prices. Anything that talks about inflation is definitely going to be more important than anything else. Right now, we're still looking at inflation. You heard Jay Powell say that was a big-time topside risk. Inflation, right? It's been the story of the last 5 years, really, since COVID. 3-month and 6-month T-bill auctions, what does this suggest? Yields are up a little bit. That shouldn't surprise anybody. We had a very hawkish Jerome Powell last Wednesday. He was very hawkish. And what we had happen was our expectations shifted from cut to maybe we don't get that cut in December. And the reason why is they don't have any data. Remember? They sit there and says, well, we don't have any data. We may have to slow down our roll. We may have to slow down our policy moves until we get a little bit more information. It essentially was a cop-out, and Jay Powell was saying that maybe we won't do anything. That's why your bond yields are up today. People were banking on those rate cuts, and now you're not really getting, it's not 100% that we're going to get them. So definitely got to be watching things like this. We are going into a state of flux. And I think it's going to be a fascinating time to be in the markets. I really do. You'll have to excuse my voice a little bit hoarse, but fighting a cold here for seemingly the last 10 days. But we'll get rid of it one of these days. This was the big news of the day. OpenAI signs a $38 billion compute deal with Amazon, partnering with the cloud leader for the first time. So what does all that mean? It means you're going to get a big move higher in Amazon. Amazon is going to be one of these that we're going to talk about in our weekly newsletter, our Switch weekly newsletter. But right here, you're up above $250 a share. Things are looking pretty good. You're thinking Amazon's going to extend to the top side. I tend to agree with that. The only thing you really have to do if you're going to buy this stock is just wait for a better trade location. And I'm always a big fan of gaps. I like gaps, especially when we're trading stocks. Very rarely do gaps not get filled, and you can see right in here, you've sort of got an area that's a pretty good gap. And if you go back, you can see we haven't traded this zone. We haven't traded this gap zone since about, the 31st of this year. So I would definitely say that is according to Hoyle Gap, really a nice sort of a negative day there. Our earnings for Amazon were big. I mean, they came in, surprised the top side by 25%, which is absolutely staggering. The revenue is staggering, $2.26 billion. I mean, it's just a major player, one of the biggest companies in the world, if not the biggest. And what you want to do here is you want to wait for a shot at that gap. Spike low, spike high, pull back right into that gap, maybe somewhere around 240. Probably going to be a pretty good trade. So we're watching that closely. Top side for Amazon, I mean, how high does it go? How high does the Amazon stock go? I mean, you're getting into the AI space, not to be outdone. They don't want to miss out on this bubble. We see we had a gap down there a while back. That one got tested and then rallied, big time bounce. But what do you have here? You're in all-time highs. You're in rarefied air. And are there any rules on how high Amazon can go? No. This thing can go higher than you ever believed possible. You could be sitting here at 300 very soon. You could be sitting here at 500 very soon. It just doesn't really matter at this point. The trend is up. Amazon's diving into the AI space. They're partnering. I mean, the $38 billion deal is no joke. I think it's going to be a fascinating time to be trading Amazon. I would wait for a pullback. To me, that's just sort of routine. That's what I would be looking to do. Definitely want to do something like that. Just get great trade location. One thing I would check, though, our swing trades using this 920 EMA crossover are very good. Where was your crossover at? Right there, before earnings came out. So you had 227, so you're buying 2 1/4, and you're up about $30 a share since that bid. So very, very, I mean, the 920 buying stocks is a pretty strong strategy. It really is. You just got to make sure that you get into the stocks when they're active, when there's going to be some action there. For Amazon, it was all about those earnings. The earnings surprised, and then you get the big deal. Today, it was all planned, and now you've got just the massive runner up there to about 260, 256. Interesting stuff. Let me see, Lander, true. Mondays are usually a great trap. Now, there's when I was a young trader, I'll just get this out there. When I was a young trader, I took a huge loss, a big one, on a Monday. And I was my job was very simple with the 7 V-Bar trading group. I was given the Euro FX futures. Here, make it profitable. And so I was a young trader like many of you are, and I waited, all weekend. I couldn't wait to trade on Monday. I loved it. I just wanted to get in there and trade because I was aggressive. I wanted to trade, make money, and, be a trader. So Monday rolls around, and this was probably my third or fourth Monday on the job, like my first month. And I had my trading account wasn't very big. I had like 5,000 in there or something. It was a sub account from the company. And I got in there, and I remember we were playing these indicators, and my custom indicators was just a perfect setup. It looked perfect for the Euro USD, and it was a Euro FX futures, excuse me. So I took a shot at it, and I threw the money down and really took a risk. And it was a buy signal. I remember buying this thing, thinking, okay, we're going to grab the bottom of this, and we're going to have a monster day, and I'm going to have a great week. And I remember the trade went in my favor by like 8 ticks or 10 ticks. It was very early. It was early Monday morning, about 6:30 my time, 8:30 a.m. Eastern. And there was no news release out, but there was a lot of action. And the market was sort of trending against me. I believe the Euro FX was down like 1%. And so I said, well, let's try to grab this. This is a great indicator. This is a great setup, right? So I went big on it. And I believe it was a loser. It turned out to be a loser. I got hit pretty good, So you're talking about a $5,000 account. I probably lost $1,200 or $1,300 on that trade, which is way too big. But I wanted to win. So I lost that trade, and I remember, I don't know that you'd say that I was scolded. I got dressed down for taking that trade, and basically the message was, you do that again, you're fired. You don't do that on a Monday. You don't do that on a Monday. You wait. And so I said, well, what do I have to do? So I had to fight all week long to get back to break even. And it was hard, because what happens is you get behind and then you start taking small profits here going, okay, I just got to get back to break even. And you're not even really trading anymore. You're just trying to get back to even so then you can make some money. Going into a hole on Monday is horrible. It really will wreck your week. And that was a trap I fell into. Just ran into a market that trended against me. Thought it was a good trade. Looking back on it, what could I have done better? I could have taken the money when it was available. And instead of walking away, down, what would that be? 20-something% of my account. I could have walked away, maybe being up a few $100s, as opposed to just being greedy, thinking, no, I'm going to double up right here. And if that's your mentality on Mondays, sooner or later you're going to run into a buzzsaw, and it's really tough to fight out of those. It's really tough to fight out of that type of a mindset. It's hard. Makes you tired. Makes you really tired. All right, Venezuela, we're watching this closely. I talked a lot about this Friday. I'm not going to get into it anymore, but it looks to me like this is going to happen. And I don't know. We're going to just wait. We're going to wait and see what happens. There was a lot of scuttlebutt. There was a lot of talk over the weekend that the United States was going to go into Venezuela proper, potentially on the ground. That didn't happen. We don't know what's going to happen here, but it's definitely interesting. That's for sure. That will send your energies through the roof. So we're watching that very closely. As far as the dollar yen here, this is another one that I wanted to talk about before we sign off. Really a pretty darn good level right here. The monthly chart, that's sort of the yearly range right here. You've got your January's highs, and then you got your April's lows, and we've traded inside of that range for the last, 6 months or so. Now we're rallying 78%. Absolutely huge. 154.81, 155 is a big deal right up here in this dollar yen. You also have a Bollinger Band, topside Bollinger Bands up there at about 155.82. So you've got an interesting type of a dynamic here. I would be a net seller pretty much from 154. We had a pretty good run. We almost got it, 154.44. I would still be looking to sell up there right around 154.80-ish, 154.79. We may have a trade idea out a little bit later this week on this one, but I'm watching this closely. I think that that's a big-time level. Just beware of the news cycle. And if, in fact, we do get that NFP number on Friday, that could be a catalyst to maybe drive this market directionally. Definitely. All right, guys, let me see. Couple more questions, then we'll go ahead and sign off. I'm starting to get a little bit hoarse here. Team Marina. Yeah, we got some questions here. True Mondays are a great trip. Lander, bro, I hear you. I learned this from hard losses as well. Good to know I'm not the only one. No, you're not the only one. on Mondays, that Monday was just a catastrophe for me. It was a long time ago too. I was a much younger man, but I'll tell you what, I still remember it. I still remember what it feels like. And I was like, man, I just got started. I just started my career and I'm already on my way out. So I definitely had to make some adjustments to what I do on Mondays. And that's one of the reasons why I approach it this way. Let me see, T. Marina, how long did it take for you to break even? It took me over a week. So I went in the hole. What was it? It was like 13 or 1400. I don't remember necessarily, but I came back the next day and showed signs. I made like 400 the next day, and then the next day 3 or 4. So it was probably a full week before I got back on track. And it's hard when you do that because you're constantly fighting to get back to break even. And what really starts to stack up is the time. So then you put a week in and you finally get back to, okay, now I can almost work for a paycheck. And I just don't recommend that. I mean, it took me forever to fight back. A week is a long time in the markets. It really is. But got it back. Took a while. That's for sure. It took a while. Let me see, eyes. Let's see, eyes hazy. Yeah, it sucks fighting all week just to break even. Yeah, there's a fantastic movie out there. No, it's not Into the Pit, the trading movie. That's a great one. There's another one out though. I'll have to look into it and get you guys the title. But there's one, and there's a gentleman who was a pit trader in Chicago, and he's sort of a big guy, sort of a big blue collar guy, and he worked all week, and he'd made his $2,000 or his $1,500 or whatever, and then he just gave it all back on a Friday. And that's why we do things the way we do them on Fridays. You go, this game will get on top of you mentally. You've got to make sure that you're strong mentally, that you're doing things that you need to be doing, that you don't try to force the game, that you're not reckless with your money. It's very important to be sound, be good, take pride of being a good money manager. Don't give anything away. And you'll find that if you can do that, you feel a lot better, and your mentality is much healthier. And that gives you an opportunity to be successful. If you don't do that and you're just sort of, I've traded with those folks too, the guys that are just riverboat gamblers, that are gunslingers. They say, hey, I'm a gunslinger. We take shots. I don't do that. It's too much. The ebbs and the flows, the ups and the downs are too much. I like a nice, predictable week. That's what I like. Nice and easy. I think it was George Vanderbilt said it, God give me a boring business. When trading's boring, it's no kid. When trading's boring, I'm typically making a lot of money. And when trading gets exciting, that typically I'm not doing very well. So there's nothing wrong with it having a boring business, believe me. Nothing wrong with that. Let me see. I know you're not a big fan of the indices, but can I know your vision on the French 40, the CAC 40, and the Euro economy or French? Yeah, we'll go ahead and look at the CAC 40. More than happy to do that. Let me see. Vieca or Armando, love from India. Good to see you. Well, welcome. Welcome. We got a great global community here. I really like to see everybody stop by. I'm just a little bit hoarse today, so you're going to have to pardon me. Yelling a little bit too much at the football games over the weekend. That's for sure. Let me see. Eyes. However hard I try, I find that my first trade is usually the best. When I try to get some more, I usually end up giving it back, and then I fight to get back to where I started. 100%. I got the 2-loss rule. If I lose 2 trades in a row, I'm done. My first trade of the day is almost always my strongest. And that comes from sitting down, looking at the screens, saying, okay, where are we going to hit this market at? Having a great game plan, and then when the market comes our way, we step in and just take the money. It's almost routine. It really is. And when you get into that mindset where you're just saying, okay, market's going to come my way, and then we're going to get it, that's great. But when that first trade goes wrong, things get a little dicey. And I've found from my experience that the losses just stack up. So it's not necessarily that you're doing something wrong or you're not trading well. It's just whatever you're doing is not working. I find that good night's sleep, good analysis, be ready for the market as it comes to you, a nice fresh trading day. Typically, that's the answer. The answer is not trying to take a bunch of mediocre trades to make back the money that maybe you lost early in the day. There's an old saying, you get what you're going to get front and center. That's why my strongest trades, if they're the first ones of the day, those are the ones I'm betting big on. It took me a long time to get there. But if I'm going to bet big, I'm betting on my best trades. And I would encourage you guys to think the same way. The tendency, is when you lose is to chase that money. And that's natural. That's natural. Everybody does that. I don't care. Believe me, the best of the best have done it. I've done it. All right. People do it. You get into that trap going, all right, well, I'm down 300 on the day. Okay, I'm going to play real tight, but I'm going to take a bunch of trades and get back to even, and then I'm done. It doesn't work over the long haul. Eventually, you get hit once, and then you get hit, and then you get hit, and now you're on tilt. Now you're decision-making. You're taking trades you shouldn't be taking. Very important to stay out of that mindset and that circle. That is a vicious cycle. There's no question about it. You learn by losing. Just don't lose too much or you can't trade anymore. That's for sure. Let's go. So CAC 40. Yeah, so I mean, the first thing I would say, Ahmed, if you're going to look at this and you want to trade it, you'll see all my old analysis there. I mean, that was probably years old. Well, it was back in 2022, right? Long time. So the first thing I would do is I'd say, okay, where are the key levels at? Are we trending? You've had a couple positive months in a row, but you haven't broke above the Bollinger. You're not really trending. The first thing I would mark on my chart is these levels right here. Very important. You had a triple top right there. You tested that zone again. You tested it last month. What's the high right there? 82.71. So right now we're at 81. So, the game plan would be relatively simple from my point of view. I'd be waiting for a pullback here, but I'm not real confident that you're going to get a huge breakout. That's for sure. If you get a pullback to 38%, that's probably going to help you out a little bit to get long. But just remember, this isn't the trend of all trends. It really isn't. You've got a market here that's very tight. It was very tight for most of the summer, and now we've sort of opened up the throttle. So if you were interested in making a high probability trade, you'd wait for that breakout. You'd wait for a break above those levels. And as soon as you broke, then we would wait for a little swing high, and then we would look to bid this thing with the pressure. The idea being, once we get up in here, we're going to be in pretty good shape to really extend these gains in a big, big way. So for me right now, I mean, you could definitely buy the retracement on the monthly. I think that's probably a pretty good trade. As far as what you need to know, and you always have to look at your long-term levels. Very important. Very, very important. The top right there, you've got a couple of, I wouldn't call it a double top, but you definitely checked it 3 times there. You checked it twice there. You checked it last month. The breakout clearly is going to develop above that at some point. What do you want to do until then? Probably got to wait for something to develop here. It's tough. It's just tough. Absolutely tough. So be careful trading that. Significant resistance right here, 82.70-ish, somewhere in there. That's significant resistance, but once this market breaks, then you can pile in and look to bid to the top side. That's for sure. All right, let's see. Wizard Alvin, grand to see you again, Shane. I'll have to go back and rewatch the first part. Wizard, we're just sort of game planning for today. No real tremendous earth-shattering trade ideas or anything like that, but always appreciate you guys watching. Let me see, John. I'm a newbie in trading, but I actually trade. I got them wrong in demo many in a day. Yeah, I mean, the biggest thing you got to do if you're new is understand your own psychology. Some of us are very aggressive. There was periods in my trading career when I was very, very, very aggressive, and I liked to trade, and I liked to take trades and make money. And I found that the less trades I take, typically the better off I am. So I love the high probability trades. I like the research. I enjoy getting a game plan together and setting up my week. And we've got some pretty good trades coming our way this week. There's no question about it. The natural gas trade looks to me like it's going to explode to the top side, but we'll see. We'll see exactly what happens. As far as the U.S. indices, I mean, we could pull charts all day long on them. You're right around all-time highs. We know we're moving higher, but we're not really moving higher in an explosive fashion. We're just sort of grinding higher. So we're going to need some news events. We're going to need some news events to drive those things, and I just don't know that we get them this week. Government reopening's big. Trade deals are big. Tariffs are big. NFP will be big. We just got to make sure that we get those releases, or else, what can we really do? We just got to wait. Absolutely, Ahmed. You're welcome. All right, Lander, last question. What do you think about the 13 and 34 EMAs? The 13 is my bread and butter, Lander. There's no question about it. The 13 EMA is the one that I like. That's the one that I was taught to use when I first started. I've seen that 13 EMA act as support and resistance successfully so many times. that I view it as being a major key, not really a key, but definitely a major component to my trading strategy. And when you get that 13 EMA to converge with the Fibonacci retracement, or maybe to cross over that Bollinger midline, we know that we've got a pretty good setup for a trade. So I'm a big fan of the 13 EMA. That's my favorite. That's the one that I trade personally. The 34, I have no experience with the 34 EMA, none at all. So you'd have to ask somebody else. We've been looking at the 920s. The 5-8-13, we're going to do that later this week. That's a real popular scalping strategy. We're going to look at that as well. But for me, it's all about the 13. That's for sure. All right, everybody. I think we've gone on far enough. I'm going about 45 minutes here. I'm going to go ahead and rest my voice and be back for tomorrow. What we have is the Switch Markets newsletter is going to be dropping here right before the London session. So if you're a client of Switch, that should get blown out to your email automatically. The big thing we need to be looking at this week is, I believe tomorrow we have Palantir stock. We're going to have the earnings report there. That's going to be an active stock for us. But what we're really waiting for is the government shutdown to break. We've got to see the government reopen. I'm not going to go into what we went into last week because the Venezuela strikes look like they're on the board. The EBT cards, there was civil unrest over the weekend, 100%. Also, the air travel situation here, that's going to be a logistical nightmare, and we're starting to see those some airports closing down. It's going to be very, very difficult to keep anything going without airports. So I'm sort of in wait and see mode, but we're going to wait and see. That's for sure. All right. Let me see. John, absolutely. Thanks for the kind words, guys. I sure appreciate everybody joining me today. If you have any questions at all, head on over to the How to Trade trading room. Send me a PM. I'll be sure to get back to you. If you're having any issues or if you have a question about something, I'm more than happy to answer. Just remember, be patient. Be patient. Be patient. Be patient. The next 3 weeks are going to be very, very good. They're going to be very good. But we've got to be in a situation where we're making our money consistently larger and we're not making mistakes. And today's a day you could really make a lot of mistakes. So I would be ready for tomorrow. I'm ready for tomorrow right now, but we're going to wait. We're going to finish up the newsletter. We're going to game plan and be ready to rock and roll when we start seeing the business pick up. All right, everybody, have a fantastic trading day. Thank you for joining me. Trade the action well, and we'll talk soon. See ya.